All right, let's dive right into Cboe Global Markets' third quarter earnings. Look, this wasn't just another solid quarter. It was a major statement. We're talking a record quarter, and they're kicking off a huge strategic pivot. So we're going to unpack exactly what this means for the stock. And, how did the market react? Well, the stock popped nearly 4% on earnings day. I mean, that's a pretty loud vote of confidence, right? It tells you investors really, really liked what they heard. This was no quiet little earnings report, and the market definitely noticed. Trading volume more than doubled.
So what's the big takeaway here? What's the main message? It really boils down to this one quote from management. They're basically tearing down and rebuilding their entire portfolio with one single goal in mind, to get laser focused on their core, the high margin stuff, derivatives and data. Honestly, if you get this one idea, you'll understand the whole quarter and where this company is headed.
Okay, so here's how we're going to break it all down. First, we'll hit the headline numbers. Then we'll dig into that big strategic pivot. After that, we're popping the hood to see what's really driving growth. We'll cover the new guidance, and then we'll wrap it all up with our take and the next call. All right, let's get into it. The headline numbers. This was a classic textbook beat and raise quarter. Cboe didn't just squeak by expectations. They blew right past them, and that really set the tone for everything else. And what's so interesting here isn't just that they beat, but how they beat. Take a look. Adjusted earnings per share hit a record $2.67. That's a full 14 cents higher than what Wall Street was expecting. And revenue? Another record, over $605 million, beating by more than 13 million. This wasn't a rounding error, folks. This was a clear signal that these guys are executing incredibly well. Okay, and that strong performance brings us right to the main events, really the core story of this quarter. It's this strategic pivot that's all about addition by subtraction. Sounds kind of weird, right? But the idea is simple. They're making the company stronger by getting rid of the stuff that doesn't fit. And this really shows you what I'm talking about. The old Cboe, let's call it, was kind of like a garage full of different tools and platforms, a bit cluttered. But the new Cboe, it's a sleek, streamlined machine. It's a focused powerhouse for derivatives and data. We're not talking about a small tune-up here. This is a fundamental redesign to pour all their energy into what they do best.
So how exactly are they pulling this off? Well, they're not messing around. They're selling off their businesses in Australia and Canada. They're getting out of the corporate listings game in both the US and Europe, and they're trimming the fat in a few other smaller areas. And the whole point is to free up cash, but also to free up brain power, management's attention, and point it all at the businesses that are really going to move the needle.
Now, you might have heard this word on the earnings call, accretive. So what does that even mean? Well, check this out. Management is saying, these moves are going to reduce our total revenue by about 3%. But, and this is the killer part, they're going to cut operating costs by 8 to 10%. That's a huge trade-off. You give up a little bit of revenue to gain a ton more in profit. That, my friends, is an accretive move.
Okay, so let's pop the hood for a second. That big strategy shift is all about the future, right? But the amazing results we saw in Q3, that was all about the sheer horsepower they already have in their core businesses.
And this chart tells the story perfectly. Look at that options business. It's an absolute powerhouse, making up almost 2/3 of all their revenue. But the crazy part is the growth. Options revenue, up 19%. Cash and spot markets, up 14%. Data, up 12%. This wasn't one thing working. It was everything firing on all cylinders. Just broad, double-digit growth everywhere you look.
So what was the main engine behind all that? It was this number right here. A massive 26% jump year over year in total options average daily volume, or ADV. Basically, people were trading way more options. A lot of that came from their own S&P index products, especially those super popular zero-day-to-expiry options. You've probably heard of them as 0DTE. They are just catching on like wildfire.
And you know what happens when you have all that revenue growth? It flows right down to the bottom line. You get this, an incredible 67.5% adjusted EBITDA margin. That number is just a fancy day of saying their core business is an incredibly profitable and efficient machine.
And it's not just good, it's getting better. That margin grew by 380 basis points. That's 3.8 percentage points compared to last year. What that shows you is incredible operating leverage. As more money comes in the door, they're keeping more of it. It's a sign of a really well-run, disciplined company.
All right, so we've covered the beat part of the beat and raise. Now let's talk about the raise.
Let's dig into their new forecast and see how Wall Street reacted to this newfound confidence.
I mean, this is what a truly bullish update looks like. Cboe jacked up its revenue growth forecast for the whole year from high single digits all the way up to low double digits to mid-teens. But at the same time, they actually lowered their expense guidance. Think about that. Growing faster while spending less. That is the absolute perfect recipe for bigger margins and higher profits. And here's how the market voted with its wallets. Trading volume just exploded. We're talking 1.76 million shares traded that day, more than double the average. This wasn't just your everyday buying and selling. This was a signal of real conviction from the big players, the institutions, who are clearly buying into this new, streamlined Cboe story.
Okay, so all of this brings us to our final segment, the next call. We've looked at the numbers, we've broken down the new strategy, so the big question is, what does it all mean for the stock from here? You know, after a quarter like this one, a clean beat, a big guidance raise, and this really compelling new strategy, it's time to put our cards on the table. So our call is this: outperform. It's pretty simple, really. Cboe is just firing on all cylinders, and this new strategic direction gives them a much cleaner, more focused path to creating value. We think the market is going to keep rewarding them for getting simpler and better.
Our whole thesis really boils down to three key things. Number one, it's just a cleaner story now. This pivot makes it so much easier to understand the investment case. Number two, margin expansion. When you have faster revenue growth and you're cutting costs, that's just a direct path to higher profits. And number three, they've got new tailwinds. They're pushing into new areas like event contracts and reaching more retail investors, which opens up whole new avenues for growth.
So what's the trade idea? Well, if you're bullish on this and you see it as a story that's going to play out over several quarters, you might want to look at long-dated call options. Why? Because this pivot isn't a one-and-done thing. The benefits are going to build up over time, and call options give you a way to get leverage on that idea. The idea that as they sell off these businesses and the cost savings kick in, the market is going to realize Cboe's earning power is a lot higher than it thought. So here's the bottom line. Cboe is in the middle of a big transformation. They're going from being this collection of different platforms to a single, focused derivatives and data machine. It's a cleaner story, it's a higher return story, and we think the market is only just starting to wake up to this new reality. And of course, we have to say it. This is not financial advice. Make sure you do your own homework before making any investment decisions.